I make over $1,000 a day from trading, and in this video I'm gonna show you the step-by-step plan how you can do it as well. This is not gonna be a BS guide where I'm just gonna sell you a course at the end of this video. I'm gonna show you how to actually trade profitably in these markets, because I've been doing it profitably for over 2 years now. But if you don't know who am I, hi, my name is Eric Cash. I've been trading for over 4 years now. I was losing for about 2 years because I didn't get the right guidance, but I guarantee you, if there would have been a video like this, I would have become profitable way faster, because this is the only video you need to become profitable. So let's get into the charts. I'm gonna teach you everything step by step. Okay, so this is how I make $1,000 a day from trading. So essentially, you're gonna go in tradingview.com. This is the place where you check the charts. You're gonna look at the pairs, etc. and etc. The pairs you're gonna choose is NAS 100 or US 500. You're gonna mark out 9:30 a.m. Eastern time. Remember Eastern time, because that is the time when the markets open, all the banks open, and that is when there's gonna be the most volume, aka the best chances to win and the best chances to make the most money. And then the next thing you're gonna do is start marking highs and lows, because above every high and below every low there is liquidity like this. I'm gonna mark out the highs and lows like this. But first of all, you may wonder, like, what the hell is liquidity? Well, I'm going to teach you. I'm going to tell you quickly what is liquidity and how can you spot it in the markets, and why is it important for us to know about it. So essentially, liquidity is like liquid cash in these markets that these banks, institutions, and hedge funds, basically the market movers, the ones who actually move the market, they want to seek liquidity to fill their large positions. And they can do that by taking out liquidity, right? So high has liquidity and low has liquidity, and a lot of retail traders, beginner retail traders, like the people who actually lose in these markets a lot, they will get stopped out when liquidity gets taken. And when liquidity gets taken out, a lot of orders will get filled, and the price has a huge chance of switching its direction. I'm gonna teach you in this video how to follow the price after that, and how to know when will it switch the direction to capitalize a lot of money, and essentially the smart money will enter around at those points. And what is smart money? It's the big banks, institutions, and hedge funds. There will be a massive volume change. But how to spot these highs and lows? Because above every high and below every low there's liquidity. So I'm gonna quickly teach that. High is created by two candles, right? First one is the up candle, right, like this. This is the up candle, and the second one has to be a down candle like this. So up candle followed by a down candle. This is the high. Above here is the high. So above here is liquidity. It's very simple, yet so effective. Okay, so here is liquidity. This is a high. It's called a high. And obviously below lows there is liquidity, and a low is being created by two candles. Down candle followed by an up candle, right? And below here is the magic sauce, the things that these big banks, hedge funds, and institutions are seeking for: liquidity. So a lot of retail traders' stop losses are below or above liquidity, and big banks, they want to take out liquidity and then switch the trend, switch the direction of the market. And that's when we enter as well, to follow the price and make a shit ton of money. That's what I've been doing. That's what caused me to turn profitable, to know this. And so remember, liquidity is resting above highs and below lows. But keep this one thing in mind, this one very huge thing in mind: higher time frame holds more power and influence. So obviously 1 minute high has a lot less liquidity compared to a 50-minute high or 1 hour high. So keep that in mind, right? And then what I want you to understand is how to follow the market trend, because that is how the market is moving, right? The market always moves in trends. Why is it important? Because, well, liquidity is something that allows us to see the trend switch, because, you know, there's a lot of orders in here. Big banks and institutions, they want to take it. Look at this. If this moves in trend, this liquidity sweep allows us to know when will the trend switch its direction. So here we're gonna buy in this trend, and here we're gonna sell. So because this is an uptrend. And how does the uptrend move? Uptrend always moves in higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, right? This is how the uptrend moves. That's when you need to buy. Downtrend, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. this is a downtrend, and this is when you need to sell. You need to sell the markets when you see this kind of price action. And obviously the third kind of trend is, you know, the 80% of how the market moves. It's consolidation, sideways movement, and this is purely caused from equal amount of buyers and sellers. And this is when you need to wait a little bit, because obviously you don't want to be buying or selling at this time. But that happens for a reason. That creates liquidity. But what now? Liquidity. When there's a liquidity sweep, let's say we're in an uptrend, right? Now you need to buy because it's uptrend. But when there's a liquidity sweep, you need to wait a little bit. Do you see the reaction to sell? Because a liquidity sweep is something that could switch the trend direction. And right here we need to sell. Well, how can we know when do we need to sell after the liquidity sweep? Well, first of all, to know will the liquidity have enough power, you have to make sure that the high is at least 50-minute time frame, right? 50-minute time frame, it has a bigger chance of causing a trend switch. If it's say 5 minutes or 1 minute, don't care about it, right? I wouldn't care about it. But above 50-minute highs and lows, there's a lot of liquidity and a bigger chance of a trend reversal, switch of the trend direction. So let's say currently we're in an uptrend, right? Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. This is a sweep of liquidity. Now, what you usually will see is all of a sudden the markets will start to react to that. It will start to go to the opposite direction. What you need to see is something called a break of structure. It is when this is also a low. We have to remember this is a low. Okay, low. It's caused by two candles, down candle followed by an up candle. So a low is being created, and you need to see a down candle breaking structure. So a down candle closing below the most recent low in the trend. I know this may sound complicated, but I'm going to show you in the chart really soon. You will understand it. So you need to see that in order to know that the trend will start to switch. But not only that, you go to the 1 minute time frame. You need to see the 1 minute break of structure. And then you have to see two of them break of structures to confirm the trend. And then you're going to follow the trend to the downside. If it doesn't do that, if it doesn't create the trend switch, it may just be a retracement and continue up from there. So you need to see the trend switch to confirm that the trend will actually reverse. So first break of structure, this is now called a lower low. But we need to see a reversal, lower high, and lower low. After this, if you manage to see this from uptrend to a downtrend, I mean uptrend, liquidity, then two break of structures to the opposite direction, then here you're simply going to short, sell the markets, and obviously target some liquidity, because liquidity is something that could switch the trend direction. And I know this may sound very complex, but it's so simple, so very simple. And obviously understand this one thing: if there is no liquidity nearby, or there is liquidity but there's no reaction, because obviously not every single time there will be a reversal, because maybe the market movers want to take out more liquidity, then you're simply just, if it continues to go up from here, you're simply just gonna look for buys, because follow the trend. That's the key. You have to always follow the trend. But if there is the liquidity sweep and you manage to see the two break of structures to the downside, then you're going to sell the markets. And I'm going to show you how to exactly do that real time in the market. So let me show you. So this is Thursday. This is right about when the session is about to open. You want to trade in the session open. After this time, you will start to look for trades. So what first will I start to do? I'm going to start marking out 50-minute highs, because this is an up candle, right? Followed by a down candle. Look at this. This is a high. Why? You may wonder, like, why is this? This is the down candle. Why is this at the top of the wick? Because up candle followed by a down candle, you're gonna choose the more prominent wick. Doesn't matter if it's a down candle wick or an up candle wick. This is the high, because it's the most prominent one. Because a high is being created by two candles. A low is also being created by two candles. So you're gonna choose the more prominent one, because up candle followed by a down candle. This is the high. Above here is liquidity, and also. This is a low, because down candle followed by an up candle, but as you can see, it got already swept. It already got swept barely, but it caused this switch. As you can see, it got swept and it already caused this reversal from here. And also low, because down candle followed by an up candle, you're gonna choose the more prominent wick. This is also a high. You're gonna choose this up candle followed by down candle. This is a high, has liquidity. This is also liquidity. Up candle followed by down candle has liquidity. So now the session will open. There will be a lot of new volume coming into the markets. So right now, let's see if one of these liquidities want to get swept. Okay, look at this. This 15-minute time frame liquidity that we previously marked got swept, right? Now we can start to look for buys, but not just yet. We need to see the two break of structures, remember? So what we need to see is a high being created and then break structure 2 times, right? So let's see. I'm going to show you how to spot the high. As you can see, now we create the most recent high. So above here, we need to see a break of structure at least 2 times, like this, like first break of structure and then a second time. Now we got the first breakout structure, right? We got the first breakout structure. We immediately see the trend switch. First breakout structure. Why is this our first breakout structure? Because this is the most recent high after the sweep, and then we broke above it. But as you can see, now we took out some buy side liquidity, so the trend may switch actually. And I know you may wonder, like, you may feel a lot of pressure and you may feel fear of missing out, but you need to see the two breakout structure in the 1 minute. This is only first breakout structure. Trust me, because this could have just been a reversal like this and continue down. In this case it wasn't, but still, trust me on this one. You need to see two breakout structures. Now we took out some buy side liquidity, right? Highs, so that means there's selling pressure coming up really soon. So again, now that we took 50-minute highs, if it gives us two breakout structures to the downside, we're gonna look for sells. If it just continues, then we're gonna look for buys, right? Let's see. All right, took out even more liquidity. Now it has a bigger chance of a trend reversal to go down, right? Because every time there's a liquidity sweep, there is more pressure building up to the opposite direction. So in this case, now we're in an uptrend, right? Now that we took more liquidity from here that we marked out previously, there's a huge selling pressure coming up really soon. So let's see. All right. Okay, now that we took the liquidity, right, we create our new low. So we start scouting. Remember, high highs, high lows. We have to check, is this just a, retracement of the uptrend and then continue up? If it continues up from here, we're going to look for buys, obviously. But remember, there was a sweep of liquidity. If it now starts to trend down by breaking structure like this lower low being created, this would be the lower low, then we really start to scout for sells. Let's see. Okay, first breakout structure. We got our first breakout structure. You cannot have the fear of missing out yet, because you just have to be patient. First breakout structure. Now we create our new low. If it breaks structure after this from here, then we're gonna sell the markets immediately. So this is our last low. This was our first breakout structure. This is our second low. So if it breaks structure from here, this is gonna be our second breakout structure. Then we're gonna sell the markets. Now, second breakout structure just happened. Like, look at this, guys. Second breakout structure. Now, I would sell the markets from here, and I would target above this lower high, because this is, look at this, liquidity sweep, and then we start to create this lower low, lower high, lower low. So above the most recent lower high, lower low, lower high. So the stop loss is going to be there, and we can target either this liquidity, this has liquidity, lows, we can target these, but the resource ratio is kind of shit. So let's target these liquidity. This was the 50-minute liquidities that we marked out previously. So this is almost like a 1-to-2 resource ratio. So I would enter right here. You have to remember, the breakout structure only counts when the candle closes below the low. So this is a bearish breakout structure, and obviously the bullish breakout structure is the same thing but up. So let's see. I would enter from here. Let's see what happens. There we fucking go, because there was the liquidity sweep, remember? So the liquidity was above from here, right here. Liquidity sweep, a lot of selling pressure coming into the markets, because a lot of liquidity just got taken out because it was above these highs. And then we see selling pressure. This is first breakout structure right here, because we created this low and then we broke structure, and then lower low, lower high, lower low. Second breakout structure, right? And this is where we enter. Second breakout structure in the 1 minute time frame. 1 minute time frame. It's two breakout structures. This is how it goes, to the opposite direction. Then we enter, and if you do not see the trend reversal, which is the two breakout structures in the 1 minute after the liquidity sweep, then you're not gonna enter, right? But always remember, like highs and lows, they only have power in the higher time frame. So if we see above 50-minute liquidity right here, highs, 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 all of here has liquidity, and then we saw it. Sweep of liquidity, almost immediate reversal to the downside. That's why it counts. And also here is a 50-minute low. This has liquidity. Also this 15-minute low, this also has liquidity right here. The more high time frame it is, the more influence and power it has. Look at this, low, down candle followed by an up candle. This has liquidity. But always remember that in the 1 minute time frame, we want to look for buys and sells by marking out these highs and lows, right? Because this is how we confirm the breakout structure. Now, in the higher time frames, the highs and lows are used as liquidity to see the reversal, but here we confirm the breakout structures, because 1 minute high and low, there's nothing, like, it just confirms the trend, right? So this is our first breakout structure. This is our new low break structure, and then it confirms our entry that the trend will switch after the liquidity. This is the thing that I use every single day. So liquidity sweep, we saw it in the 50-minute, took out these highs, and then we broke structure 2 times by creating the trend switch equals to money. We follow the trend after that. Now, if it doesn't give us any liquidity sweep, if there's no liquidity nearby, what you're gonna do It just follow the trend, right? Higher highs, higher lows, higher highs, higher lows, higher highs. You're just gonna follow the trend, right? Because if there's no liquidity that could switch the direction, you're obviously gonna follow the trend to the upside. Because not every single time there is liquidity. Not every single time there's liquidity available that you can see or see the sweeps. So you're just gonna follow the trend. But I want to say this one thing. You want to become profitable. You want to know why 99% of traders lose. You want to know how and why are these markets manipulated. You want to learn how to actually win consistently in these markets. If you actually want to achieve greatness in life with trading, then click the first link in the description. It gets you to my free course video, about like 34 minutes long. That's all you need to actually master these markets. All right, as usual, I'll see you on the other side. Peace out.